China and Vietnam stand out. Their output today is as much as 20% higher than it was before the pandemic. But even the other large countries in the region, Malaysia, Philippines, Indonesia, their output is about 10% above pre-pandemic levels. Thailand is struggling. It's barely where it was before the pandemic. In terms of the sustainability of the recovery, we argue that in this report, for countries outside China, their fortunes are going to be closely tied to what happens to the global economy. 2023 was a hard year because growth slowed down and financial conditions were tight. But 2024 will see some recovery in growth and an easing of financial conditions, which is why we see growth in the region outside China edging up a little bit.
Right, but how structural do you see China's problems to be at this stage, especially at a time when people are talking about green shoots of recovery?
I think China's current economic performance is being determined both by how it has grown in the past and how it aspires to grow in the future. Its past emphasis on growth driven by investment in infrastructure and property has left behind, as you know, a legacy of debt, corporate debt, and is inhibiting new investment. It has also meant an increase in household debt and an erosion in the value of household assets, which is inhibiting consumption. I think the challenge is as China seeks to transition away from this growth path to another growth path, which is based more on consumption and innovation, and seeks to ensure that growth is more inclusive, more stable, more sustainable, more autonomous. It needs to do this in a way that it chooses economically efficient instruments and does this in a way that policy is predictable. I think the problem is that it hasn't so far, and that has exacerbated uncertainty in a way that consumers are choosing to save even more, as much as 33%, and business investment is inhibited by uncertainty, especially in these sectors, the internet-related sectors, which have seen the greatest changes in policy.
But what has been a drag in terms of elevated debt levels as well as property market woes has, do you think, somewhat been offset by the kind of innovation and R&D that we're seeing in China, where, of course, you're saying that China dominates in a number of venture capital funding projects?
I think you're absolutely right, but one is more the proximate. I think the difficulties in the property sector, the legacy of debt, are certainly inhibiting both consumption and investment. But I think the fundamental strengths of China's economy lie precisely, as you said, in its remarkable technological capacity, its innovative capacity. And that's what makes us optimistic about the longer term, provided it can deal with the proximate, which is both, the global tensions, which are limiting its access to technology and high-tech products, but as well as the longer-term challenges of negotiating aging and climate change.